Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Well, it's Friday. We made it to the end of the week. Now, did this week go by really fast for you? Went by really fast because it's a short trading week, only 4 days. Feels like I missed a day. The week just flew past. So what do we got going on today in the markets? Well, we're having an update. Dow up about 100, NASDAQ up about 150. So we're filling the gap. We gapped down yesterday. Now we come back up and we're filling that gap. Now, I still think we're going lower. Now, why do I think we're going lower? Well, we got this thing called the debt ceiling. Everybody's talking about the debt ceiling. $31.4 trillion. That's all we can spend. That's the debt limit. They have to raise the ceiling. And sometimes when they don't agree in Congress, Democrats and Republicans are going to fight it out. That's going to send the market lower. It just does. Look at your government officials have mismanaged money so badly that we're $31.4 trillion in debt. And it's much worse than that, but I won't get into all that. But we filled the gap, and I think we're going to come back down lower. Now, how low do I think we're going to go? Well, I think we're going to go down to about 340 on the SPY. Now, this is going to take time to play out. We're sitting around 390. Anyways, that'd be 3,900 on the S&P 500 is probably going to come down to about 3,400. We're going to hit a new low. The low was formed in October, and we're going to take that low out. That's just my opinion. Your opinion may that we go straight up from here, and that's perfectly fine. But the other thing we got is a lot of layoffs. Every day, you can't go a day without layoffs getting announced. Google comes out today laying off, 12,000. Well, that's nothing, right? Those are high-paying jobs. Those are people with houses. So what's going to happen to houses? Well, we're going to talk about that. Now, people think I talk all just gloom and doom stuff. Let me give you the good news in the housing market. There's good news. We were at 7% mortgage rates, and now we're down to about 6.1. That's really good news because the home buyers are re-entering the market. Really good, right? I don't believe it, though. That's the good news. Let me give you my side of the story. Look, at a year ago, we're sitting about 2.9% on a mortgage, and now we're over double that. Does that sound like the home buyers are going to be re-entering the market? I don't think so. Maybe you think so. Maybe in your area, you have a lot of home buyers. Here's what I want to talk a little bit about today. The new home sales. I mean, it's dramatic. I mean, they got a big problem. 68% of contracts are being canceled. That's like 7 out of every 10 contracts. The buyer's just walking away. They have a problem. Now, they're doing two things. Well, first of all, let's say they're kind of desperate, right? Well, okay, so they're desperate. So they're walking, the buyers are gone. They're gone. The home builders are desperate. They got this inventory. They got this short-term debt against it that they got to sell the inventory so they can dump this, pay off their debt. So they have to dump the inventory on the market. But that's not what they're doing. They're so desperate. They're holding the inventory off the market because they don't want to crash the prices any farther. Look, okay, now if you're buying a house, selling a house, well, you can still get out. Look, at one on my street just sold it took about a week to sell. Now, Billy Bob on my street got out at 2.8 million. 2.8 million's where Billy Bob got out at. Now, how much did this guy get out at? 2.2 million. Okay, so about 20% less than Billy Bob. But this guy's still making it out because the next guy is probably going to be under 2 million. Look, at the house prices are coming down. That's just the way it is. But let's get back to the home builders. What are the home builders doing? They're doing two things. Okay, they're doing two things. First, they're holding the properties off the market to prop up the housing market. There's no buyers. So they're not putting all their inventory onto the marketplace. But it's even more interesting than this. D.R. Horton, they came out and they announced that they got this new program where they're going to rent the houses. They're building brand new houses and they're going to rent them out. Well, they're having trouble getting them rented. You see, they rented a couple of them, but they're holding the other ones off the market because they can't get the ones they have for rent, and they're building these new ones and they want to dump want them on the rental market. So rent prices are starting to come down. Not a lot, 2, 3, 4%, but it's dropping month over month over month. You're seeing the rental market come down, which is going to put a lot of pressure on the housing market. When the rental market starts to come down, the investors run away. You see, we talked about that before. Like right now, the buyers don't really have a choice. You see, even if they want to buy, they can't afford it. They don't have the money, so that's not a choice. They can't buy. The seller, they have a choice, but they're making a bad choice, I think. Okay, they're not reducing their price enough to get the buyers interested. They're just not. They're either taking the properties off of the market, or some of them are putting them for rent now. Like the home builders are putting them for rent. Some of the sellers are pulling their houses off and they're renting them. Now, okay, let's say they sign a year lease, right? So they think a year from now that house prices are going to be higher. Now, a lot of people think that. A lot of people don't think we're coming down. Matter of fact, the article I was reading, they said, hey, the worst is behind us. We're kind of bottoming out here. Down only 10%. Look at what was the price? The median home price in the U.S. got up to, I think it was 449,000, and now it's come down about 49,000, sitting right about 400. Okay, so overall, the average across the United States down about 11%. Now, of course, in your area, you're probably still up. In my area, we're down about 20%. Okay, so it varies, but overall across the nation, down about 11%. So far. But the article's saying that, well, the worst is behind us now. And maybe it is. Maybe it is. I don't believe that, but maybe it is. Okay, look, they think that the interest rates on mortgages will come back down, and this will spur this buying, this frenzy again. I don't think the frenzy's coming back anytime soon. I think if you can find a buyer right now for your house, you're going to be very lucky to get out. Now, right now, okay, so right now about, well, almost half of homes being sold right now, they're giving concessions. They're giving you a new roof. They're giving you new appliances, whatever you want. They're giving you money for closing. They're giving you money for your down payment. But the seller is making concessions because they want to keep the price up there where Billy Bob got. You know, you want to get as close to where Billy Bob got out at as you can. So the sellers are giving concession. Almost 50% are giving concessions right now. Now, this time last year, okay, there were so many price reductions, I couldn't believe it. But you know, this time this year, there's twice as many price reductions. Everywhere, look, I'm a real estate broker, and in my inbox, all I see is just huge price reduction, amazing price reduction, biggest price reduction. We got price reductions in my area over $1 million. Over $1 million, the prices are being reduced. Now, that's a big price reduction, but granted, these are $4 and $5 million homes, so they're really only reducing it 20%, which is normal in my area, but that's $1 million price reduction to many of these people. Now, iBuyers have been dumping their houses onto the market also because, well, I think some of them are going out of business. I think Open Doors probably going to close their doors. I think they're going to be going out of business. So the iBuyers have been dumping their houses, but they have so many concentrated in certain areas that they can't put them all on the marketplace. So what are they doing? Well, they're holding them off the market, or some of them are even renting them out. Okay, so here's the thing, right? Now, I've made a lot of money in what was called a lease option. Okay, lease options, when people can't sell their house, the thing to do with them is go and offer them, well, let me rent your house for a year and give me an option to buy it at, today's price. And a year from now, we'll come back and revisit and see if I want to buy it. But I want that option. You see, that way, if the prices did surge, which I don't think they will, but if they did, you'd be locked in at today's prices. So lease options it's a good tool. It's a good tool. In the old days, I used to try to get them to lease option for 5 years at a low rental price and then kept there. I'd go put a tenant in, and then as the market went up 5 years later, I could make a lot of money using just a lease option. Lease option is a very good tool. Now, you see, a lease option, you won't be buying the property, right? There's no obligation for you to buy the property. So you're just going to lease it out and try to get a little below market rent if you can, and sit back and wait. That way you're locked in if the prices do surge. But if you, I mean, this is only for people that want to buy right now, that want to buy. A lease option may be a better way to go because you're not locked in when a year from now comes around and the house is down 10, 20, 30, 40%. You don't have to buy it. You can walk away. You can go find a different house to buy, or maybe even tell the owner, hey, I'm not exercising my option, but I will give you 50% off of what that option is because the price will come down. So do not go out and buy right now. That's just my suggestion. Of course, you have to do what you want to do, and you have to do, for your own research. This is just a guy. I am a real estate broker, and I'm just a guy with a computer, a microphone, telling you what I think is going to happen. This is just what I believe will happen. Now, not everybody believes this. You see, there's certain things, okay, for example, the stock market. Look, the stock market, there's an old rule. As January goes, the whole rest of the year goes. Now, we're having a good January so far. We were up about 5%. I think that got cut in half, so we're up about 2 or 3%. But if they can close January up, maybe the year will be positive. But you see, we still got another week or two left in January, and I think they're going to take this market lower. I actually think January will be a down month. We'll see if that plays out that way, but that tells you how the rest of the year's going. Look, in real estate, I can tell you the rest of the year is not going to be doing that well. It's really not. The volume is just plummeting. It's falling off. It's just falling off. There's just no buyers. We pulled all that demand forward during the pandemic, and everyone who wanted to buy already bought, and the ones who were on the sidelines with this spike in mortgage rates, they're going to stay on the sidelines. They're going to maybe do a lease option, maybe hang out for a year and see how this plays out. See, I'd skip all of 2023. If I were a buyer, I'd just skip it. I'd just go sign a lease for a year somewhere, and I bet you're going to make a lot better money that way than buying a house now and being the bag holder when they come back down. Now, this is just my opinion, and you guys got to understand, you have to do your own research. But I appreciate all you guys listening to me because I like talking to you. We made it to the end of the week. Now, give me a thumbs up before you get out there, and have a great weekend. Hit that subscribe button. A lot of interesting things going on next week when I want you to come back so we can talk. I'm Tall Mike. Bye-bye now.